Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Bitfinex, guys. And last time we spoke, I believe it was last time we spoke, price was operating within this wedge. To be honest with you, it's been a long weekend, so I can't I can't remember. But price was either last time or day before yesterday. Price was operating within this wedge, guys. And this smaller wedge, price did end up breaking down. I told you as it was reaching the apex, there was a good chance price was going to break in one direction or another, as is true with any wedge. Price ended up breaking down, finding support down here at about 6,100 after wicking through a few times. And then this was just pure manipulation, created kind of a Bart Simpson pattern. If you look here, you can see it much better on the 1-hour chart. Came down, moved sideways, moved right back up. Anytime you see a pattern like this, guys, that is manipulation. Anytime you see a U like this or an upside down lowercase n, anytime you see that like this, call that a Bart Simpson pattern, guys, and that is just pure manipulation, and it lets you know that the market is going to act in a very irrational way. And that's exactly what we've been having, guys. And I'm going to go a little bit deeper. And I usually don't talk about my trades, and I don't do that for a lot of reasons. But I am going to talk a little bit about it today, just very, very briefly. And the reason is because I want to show you guys how manipulated this market actually is, and the psychology behind it, so you guys don't get trapped in some of the traps that young traders get trapped in. I know I said, how many times can I say trap? Drink a beer every time I say trapped, guys. So what happened was, I'll just explain to you what my trading pattern was here, guys. Price did end up coming down here, created the Bart Simpson. We could almost see it coming. You know, it's just classic Bart Simpson pattern, moves flat, goes sideways, and then comes right back up. When price came right back up, guys, as soon as it hit this zone, this order block that I've told you guys about a few times, or at least on the last video, I think I told you guys about, sitting at about 64.30, somewhere thereabouts, guys, this little order block here. As soon as it hit that, and then strong rejection by the wick, I knew that this was first of all, I knew it was manipulation based on the Bart Simpson pattern, but I also knew, guys, this strong rejection off the wick, I didn't know, but there was I knew probability wise that there was a good chance price was going to break down. And it made sense. If you're looking at this from a whale's perspective, you stop everybody out, trap them short, they go up, price goes up, trap people long, and bring it right back down. So what I did is I ended up opening up a short position right at the bottom here. I think I opened up, let me look it up actually. Opened it up right at 63.95. So I opened up a short at 63.95, guys. Anyway, and sure enough, price ended up breaking down. Didn't close, held on to it, knowing that price could fall much further. Came way down, came right back up, started moving sideways, and we started to build structure. And then it became very clear that we were operating within a larger wedge. Okay, so now we're operating within this larger wedge. Price is respecting the ascending support, respecting the descending resistance line, creating this larger wedge here, guys, getting tighter and tighter, squeezed tighter and tighter. And it looked like a larger move is coming, and it does look like a larger move is coming. So I had my short position already open from 63.95. Where did I put my stop for that short position at 63.95? Well, I looked at the top of where does a normal retail trader put their stop? Well, a normal retail trader would either look at this ascending support line from the previous wedge, bring it down and put their stop somewhere right at that ascending support line, or they would look at this wick from this prior candle and they would say, okay, from this structure here, more than likely I'm going to set my stop right here at the top of this prior candle. So they put it somewhere around 64, where would that be? 64.84, somewhere thereabouts, 64.84, 64.85. So that's what they put their stop for a short position. Okay, so where did I put my stop? I put my stop just above that, knowing that if they go stop hunting, I don't want to get stopped out. Right? So I put it just above that. I put my stop at 65.14. I put it at 65.14 because you always use an odd number. Don't ever use a multiple of 5 or anything else. Always use some odd number. So 65.14, that's where I put my stop. Okay, there's a reason I bring this up, guys. So fast forward, we're moving ahead. It looks like price can go in any direction, one way or another. I've got a short position open, and I can see that it's respecting this ascending support line. So what do? I went ahead and I said, okay, if price does end up breaking down, hitting the ascending support, I'm going to go ahead and open a long position as well, knowing that price could break in one direction or another. Sure enough, price ended up coming down, hitting, wicking into this support. I filled my long position at 62.19. Again, 62.19, not 62.20, not 62.15, 62.25, 62.19. I have to always use those odd numbers, guys. Help you get your, it'll make sure you get your orders filled, and more importantly, make sure you get out when you want to get out. So 62.19 is where I entered my long position. Price ended up coming up. So now I've got a long and a short open. Okay, now we enter this candle here, and this is where it got interesting. Look at the candle. Look at this doji candle where price just went up almost $200. It went down almost $200. This is a $300 move. So top of this was 6,500. Bottom of this was 60.99, call it 6,100. So that's a $400 move, guys. $400 move inside. This happened inside of an hour, or less than an hour. In fact, let me pull it up. Actually, yeah, it was even less than an hour. Let's go in 30. Look at this. This happened in less than 30 minutes. This happened in like 15 minutes. That was pure manipulation, pure stop hunting, wanting to take out not just the longs, but not just the shorts, but both the long and the shorts. That's rare. That is some sneaky crap, guys. And had I had, where did I put for my long position? Where did I put my stop? I put my stop for my long. I put my stop at 61.51. So just below this wick. This wick is at 61.62. I put it at 61.51, knowing that if I get a stop hunt, sure enough, price came down, went stop hunting, didn't stop me out because I knew what they might be doing. Didn't stop me out to the upside because I knew what they might be doing. But if you're a retail trader, you may have entered, whether you entered a long or a short, you'd have been more than likely stopped out by this manipulation move. And you know, nothing wrong with a stop out, guys. Stop out is part of trading. But when you don't have to fall prey to garbage like this, I almost slipped, guys. I'm trying to keep this PG. To garbage like this, then you know, it'll just save you a lot of headache in the future, guys. So just make sure you put your stops. Just that small little difference can make all the difference in the world. So anyway, fast forward to where we are now, guys. Now we're sitting here at the apex of this wedge, and I am still expecting a breakout in one direction or another. Because they've already gone stop hunting, I've tightened my stops on both sides just a little bit, expecting if price does break out, more than likely it's not going to come all the way up and go stop hunting in. It'll be a very quick juke in one direction or another, or it's just going to continue to break out and continue to move. To the upside, guys, I've got my target sitting around this order block up here between 7,000 and 7,100, somewhere right in here. Between 7,000 and 7,100, I do think there's a good chance price, if it does break up, it's going to break up above into that zone. To the downside, I've got my target sitting around 5,900, somewhere there about, knowing that this 6,100 has been tested so many times that if it does come down again, there's a very good probability it's going to crash right through that 6,100. Doesn't mean it has to, guys, just mean probability-wise. It could come down, bounce off it, and come right back up. We could have another bull trap or bear trap. That is very possible, guys. That's the risk we have to take. Could I get stopped out in both directions? Absolutely. That's a risk I have to take. I've tightened up my stops, guys. All I can do is trade on probability, and if I get stopped out, I get stopped out. I'm certainly going to get stopped out in one direction or another. That's a given because I've gone long and short. So I'm going to get stopped out on one of my trades, you know. But fortunately, because I was able to put my stops where I didn't have to worry about this manipulation here. So which direction do I think price is going to go right now, guys? To be honest with you, I can see structure in either direction. If I go swing high, swing low from this microstructure, what do I see? I see a, let me get it right on there. What do I see? I see a perfect hit off the 786 fib twice. 1, 2. Perfect hit off the 786, telling me I've got a lot of structure going down. If I go to the upside, go swing low, swing high. Go ahead and hit it here. What do we have? Swing low, swing high. I've got a perfect hit 1, 2, 3 times off the 786 or off the 618 fib level, guys. Perfect hit. This went in a little bit in the golden pocket, but mostly a perfect hit off the 618 fib, off the golden ratio, telling me that we've got structure to the upside as well. So there, you know, I can't tell you which direction price is going to go, and I honestly, and I talk with a lot of people that do this for a living, guys. People are a lot smarter than I am, to be honest with you, and they don't have no real bias either. So you know, what direction is going to go, I don't know, but I know that I'm prepared either way. I am prepared either way, and I'm not saying to do this, guys. I'm just saying, just kind of don't. If you're not, make sure you paper trade before you do anything else, guys. Don't just go out and try this without paper trading first. So anyway, I just want to give that a little tidbit of information. So, if price does break up, guys, we have to watch for a possible double top here at this Prager microstructure, sitting at about 66.30. So possible come up, hit that structure, come right back down to the downside, guys. We've got this low here of about 6007. So almost exactly 6,000. So price may come down, hit that as well, come right back up, guys. But I do think there's a high probability we're going to get a larger move very, very shortly. If we check our moving, or excuse me, we look at our indicators, we can see the stock RSI on the 4-hour charts very oversold, looking like it may, or excuse me, very overbought, looking like it needs to correct, come to the downside. However, if I come out to the daily, Daily is very oversold, guys. So again, mixed signals all over the place. We come back to the 4-hour. We look at the RSI on the 4-hour, guys. We can see the RSI. I'm going to just bring it up here so you guys can see, get a little better shot. We see the RSI on the 4-hour, guys, has got a very strong resistance sitting right about 47.2. Now we're right up above this resistance, tested 1, 2, 3, 4 different times, guys. I do think if it does break to the upside, guys, that based on how strong this resistance is, it has been, if it does break to the upside, guys, I do think there's a good chance that it's going to move and move possibly coming up here into this little zone up here sitting at about 60, 59, 60, somewhere thereabouts, guys. So we are getting indications that if price does break up, that we got a lot of room to move to the upside. To the downside, guys, we haven't broken above this resistance yet, so it could get another rejection and break right back down, guys. And we can see that this 47.2 on the RSI has acted as either support or resistance many times in the past. Here's support, support, looking back here, support, support, coming back here, resistance, 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 all the way back here, support, support. I mean, you can go check it for yourself. Resistance, resistance, guys. So we know it's a very relevant zone. So if we do move to the upside of this, I do think it's going to, just looking at history, anytime it's broken through for the first time in either direction, it has moved quite significantly in one direction or another. So let's wait and see how price does into, make it see if it does break to the upside. If we look at our MACD, we can see that MACD looks like it's kind of flattening out here. However, the signal line and MACD line are showing no sign of reversing course, are looking rather bullish at this time, to be kind of honest with you. If we look to the daily, though, daily histogram is starting to tick up. Daily MACD line it looks like it's starting to curl over. So again, possible signs of bottoming out, possible signs of reversing course. Yeah, it's possible, guys. It doesn't mean it has to happen, though, but it certainly is possible. If we come in here, we look at our moving averages. This is again on the 4-hour and EMAs as well. We can see that the 8-day EMA and the 21-day EMA are starting to get squeezed together. We can see that price finally was able to break above this 8-day EMA and is now acting as support. That's a good sign. If we can get a decisive break, now the 21-day EMA is acting as resistance. And as you guys know, on the 4-hour chart, I view the 21-day EMA as a short-term momentum indicator, not a long-term, a short-term momentum indicator. So in other words, if we get a 4-hour candle that opens and closes above this 21-day EMA, in my opinion, that's a good signal that short-term bulls are starting to gain some momentum. Again, not long-term, short-term. So you can get the daily chart, guys. We can see that price bounced off this lower Bollinger Band the day before yesterday, and has continued to trend up. Even though we've got a lot of strong wicks here, guys. Yesterday, it's good. I'm glad to see that the daily candle, at least so far, has been able to create a higher high from yesterday. It looks like it's starting to trend up. Wick is a little less of a wick here. Looking rather bullish. We still haven't tested this 8-day EMA quite yet. So I'd like to see at least a test of this 8-day EMA excuse me, guys. At least a test of this 8-day EMA on the daily chart. I'd like to see it at least close above this 8-day EMA. That'd be the most bullish thing. But as of right now, we're just not seeing it. But then come back here, look at the 4-hour. We can see that the Bollinger Bands are starting to bottleneck just slightly. Anytime you see a bottleneck like this, guys, that's a very good indication we're going to get a breakout. Now they're just slowly starting to bottleneck, creating kind of a little tunnel, smaller tunnel. We can see the 21-day and 8-day EMA are starting to converge together. That's a good sign. We can see the 50-day moving average moving closer to the 21 and 8-day EMA, guys. Another good sign, possible breakout. I don't know, good is a relative term. I shouldn't say good. A sign of a breakout could be a breakout to the downside or the upside, so it's not necessarily a good sign, but it is a good sign that it is a good indicator, I should say, of a breakout. Put it that way. A good indicator of a breakout. If we come in here, we look at the 1-hour chart. Now, the 1-hour chart is indicating a breakout is going to come very, very soon. We can see that we've got this continuing tightening, continuing bottlenecking of the Bollinger Bands. We can see that our moving averages are all converging on top of one another. 821 and 55-day EMA all converging on top of one another. So this is a good sign that price is probably going to break in one direction or another very, very soon. From an Elliott perspective, guys, I know a lot of people ask me, my bearish count from an Elliott perspective is this. I'm going to zoom back out, guys. Remember, from an LA perspective, guys, this prior high here, when it came up to 10,000, this prior, you guys know my bullish count. And my bullish count is that we are in an A, B, C, D, E pattern. I've showed you guys that 1,000 times. We're finishing up the E. My bearish count is this. We've got 5 waves down here. We can see that this latest correction up to 8,500 is almost a perfect ABC correction from 5 waves down. And if that is in fact the case, we'd be starting 5 new waves down, guys. And we can see now, if I zoom in here, let me kind of zoom in here to the hourly, give you a little better look. We've got a clear 1, 2, 3, 4, and I do believe we're looking for the bottom of wave 5 now. Excuse me. If that is in fact the case, guys, I do believe that there is one more wave down. Why do I say that? Oh, let me look here. When you zoom in here, guys, this is a clear 1, 2. This was a very, very deep retracement for a 1, 2, but it is still technical. It was retraced within I think within $10 or something like that. But we know that wave 2 can retrace up to 99.9%, and it's still technical. That's exactly what happened. So in my opinion, we do have a 1, 2. All of this being 3, 4. And down for the 5. So if we break it down even further, guys, knowing that this is first of all, we know this is a very highly leveraged market. All right, so if we have a 1, 2, 3, come back down for the 4 here. These are subwaves of the 5th wave. So 1, 2, 3, 4. Now, does this subwave here retrace deeper than the start of wave 1? Yes, it does. Absolutely. Okay, so what does Elliott Wave say about that? Well, in a highly leveraged market, that is allowable. And not very deep. So in other words, not below the bottom of wave 2, but the bottom of wave 2, not below the bottom of wave 2. But as long as it's within the top of wave 1, you can go below the top of wave 1 in a highly leveraged market and have it remain technical. So if this is in fact a correct count, that's exactly what we have. So we've got a 1, 2, 3, 4, and now we're looking for the start of wave 5. We've got a start of wave 5. We're looking for the start of subwave 5 to complete the 5th wave. So if that is a technical count, where can we expect wave 5 to go? Well, we go to the start of subwave 3, go to the top of subwave 3, go to the bottom of subwave 4, and where does this bottom count? Well, it shows you if we do a 1-to-1 extension, we've got it about coming down to about 5,600 to complete this pattern. Now, does that mean that's going to happen? Doesn't mean it has to happen at all. Not at all. But it does mean there's a high probability if this does end up breaking to the downside, and if we go down, guys, there's a good probability that that we may get down into at least that 5,900, somewhere thereabouts, guys, possibly coming down if we just look at this from an LA perspective, possibly creating a 1-to-1 extension down to that 5,600, guys. So that is a possibility. That is my most bearish count. I'm not saying that is going to happen, guys. I'm just saying that is a possibility. We get shortened 5th waves all the time. So if price, even if it does break down, it could stop at that 59,5900, somewhere thereabouts, guys. But just keep in mind that this market could go a lot lower than that. And I don't mean to sound vague. I know that's frustrating, guys, but that's just the reality of the situation that we're in right now. So anyway, guys, I'm going to go ahead and wrap it there. If you have any comments, questions, suggestions, please let me know in the comment section below. I certainly would appreciate an upvote or a re-steam or a like, depending on what you're viewing this on. That just lets me know that you guys enjoy this and you want me to continue making videos in the future. And until next time, guys, please trade safe. This is Working, signing out.